Interesting note coming in from Sanjay Mukim of JP Morgan. They have gone ahead and collated the earnings preview for Q1FY22. They believe that this particular quarter, the JP Morgan universe is expected to deliver a 49% year-on-year earnings growth as far as the top line is concerned, and again 104% growth coming off a low base as far as the bottom line growth is concerned. They are saying that especially strong growth is seen this quarter given the fact that we are coming off a very low base. When you're talking about what are the sectors that are expected to drive earnings, JP Morgan believes that the resources will continue to drive earnings growth while select defenses will continue to lag. They believe that margins are seen declining almost 85 basis points on a sequential basis, as there will be an impact of higher raw material costs as well as other costs. What they are saying is that year-on-year comparisons are less relevant this particular quarter, given the fact that there were lockdowns in the base quarter and significant lockdowns. Also, when you're talking about some of the defensives, they see sequential revenue deceleration given the fact that there was quite a bit of hindrance as far as operations were concerned across the entire spectrum. They are saying on a sectoral basis, they see PAT growth across most of the sectors. Energy and metal companies, they believe, will continue to benefit from strong price action seen in commodity as well as other prices. When you're talking about OMC, they believe higher oil prices and strong diesel gasoline cracks will help and aid the growth as far as OMCs are concerned. When it comes to the Nifty 50 companies, they estimate aggregate revenue growth of close to 53%, EBITDA growth of close to 44%, PBT growth of close to 44%, and a PAT growth of close to 85% on a year-on-year basis. They believe that when it comes to Q1, the macro backdrop had been quite muted given the fact that again we are going through the wave 2 and the ensuing lockdown. They believe that activity levels in April and May contracted significantly. May CPI inflation also shocked expectations by printing in at 6.3%. Now when you are talking about going forward, what is it that you need to keep an eye out for? Management commentary for FY22 when it comes to demand and demand trends, the impact of higher raw material as well as input costs on near-term margins are very important watch drivers. They also believe when it comes to financials, focus will be on asset quality, not only on asset quality, also on loan growth trends. So overall, going into this particular quarter, JP Morgan has written a preview note where they see strong growth coming off a much lower base of last year.